Oh, good morning. This is Dave Johnston, Day Trade the Markets. We're looking at a 2-minute chart of the December gold contract. We had a good down day yesterday. I put the order in. I had to step away, and it has come up and filled us right here. Um, I put the order in after the market had come in here. In other words, after the aggressive buying right here, which is this blue bar, had failed to muster up any follow through. We also have this area of resistance going into today, knowing that this area up in here would likely act as resistance. So we had aggressive buying up into that resistance area, and it really confirmed that it was exhaustion in its nature, in that not only did it not have any follow through, but when it came down on the low here, it really didn't bounce at all. It had this one slight attempt here on this deceleration bar, which is this selling bar right here that you can see the triangle below it. It tried to rally up but decelerated to the upside as well, and then it started to trade below the low here. So as soon as it was trading below the low here for a few minutes, I put a sell limit in just below the low of this blue bar right here, and was filled here just a few minutes ago. So it's moving down nicely, and obviously the next target is the low of the day. Now the low of the day, as you can see, is over here on this bar right here. So the low of this bar is at 1318.60. So what I'm going to do here is now that it's moved nicely, I'm actually going to go ahead right now and take a profit on 2 of these 4 contracts, and I'm going to try and get out right about here. We'll go for about 20 ticks on that, see if we can get that. And I'm also going to put in a protective buy stop, basically at break even here. So buy stop right here. I'll just move it up to here. So now if this, you can see here that we do have a magenta bar on the low. We've had a wave of selling here with the red bar, light red or pink, and then this magenta. So strong aggressive selling here, culminating in the most aggressive kind of selling here. Now we haven't taken out this low here, but we have come down and tested into this area. So I want to get filled on this right away. I had to step away, so I'm going to go ahead and exit here. I know it's just it's about $1.50 in our favor, so we'll go ahead and take the $1.50 on that. Hopefully. It's a couple of ticks. Let's see, the high of that magenta bar is at 1320.50. Okay, it's starting to rally a bit. Well, we'll just leave it in here for just another minute or so, see if we can get filled at the $1.50 mark. If not, I'll exit at least half of the position. Want to obviously, this is a problem when you have to step away for a minute. Sometimes the market can move in your favor. I will often use the automated trade management feature with the NinjaTrader to go ahead and take a profit at a certain price and that kind of thing. I decided not to do it on this occasion because I was going to try and record the actual trade. So, okay, so we just got filled on that. And what I'll go ahead and do is just put in a marker here because that was at 6, yeah, right here. So that's where we got filled on this one. Okay, I'll just put that marker in there. So, okay, filled at $1.50 on the first 2 contracts. So, if this market bounces up here and then starts to come down, I will then lower the stop to just above that bounce. So for right now, though, I need to adjust here, actually, don't I? We're down to 2 contracts here, so I will make the change on that and put that at 2. So we just have 2 contracts left, and our stop on that is at break even. So I'm just going to leave it like that for the time being. Obviously, the next target is down here. I'll just mark in here, this is the low from today. So I think what I'll actually do here is I'm going to go ahead and buy back 1 contract down here. Should have come down and test towards the low. See if we can get filled on this. If it does come down, I'll have that order in. If we do come up and get stopped out here, break even on the second half, I'll just go ahead and cancel this order. But for now, we'll just leave it like that. We've got our orders in place. We've got a good idea of what's going on. So that's it for now. I'll go ahead and pause the recording and pick it up as the market dictates. Okay, just resuming the recording here. You can see the market has bounced. Okay, we just got filled right there at break even. So, um, I think this trade was an interesting one in that it was very easy to identify because the market yesterday was in a good down mode. We knew we had good resistance here from yesterday. We knew that if the market got up here and got rejected, it would be a good opportunity. An earlier trade with this decel bar right here as it tested the high was another opportunity to get short, depending on how you really wanted to play it. Um, but when we do have, this is our most aggressive buying bar is the blue bar. The most aggressive selling bar is the magenta bar. So when a blue bar like this, like here you can see this was a wave of selling right here, and you would expect this area to be resistance. So that's why we have our trade location zone up here, which worked out very nicely yesterday, did act as resistance and restricted the market from moving up anymore. So when we opened today, we came down and took out that low, reconfirming the strength of the sellers, or at least control of the market by the sellers. So when it did bounce up today off of this red bar, you can see once the market had moved above this red bar here in this time frame, it bounced down, tested it, had the good move up. So we got really strong aggressive buying in here. So when that buying is confirmed as exhaustion, in other words, no follow through, at least to speak of, other than, well, really no follow through at all at the high of this, what we call a high velocity move, which is this rectangle, vertical rectangle right here. So no movement above that, but instead the market came down and then started to trade below the low, which is below this green area in here. You can see our trade location zone flip from green to red. In other words, from potential support to potential resistance. So when you tie in the negative bearishness of the market yesterday and then going into today, in that this area up in here of potential resistance held, thereby confirming our belief in the control of the sellers, that when the market came down here and held below the low of this blue bar, which is the same price as the low of this high velocity move. So when that occurred in this time frame, right in these few bars in here, it gave us the opportunity to get short here. So that's why the limit order was put right there. And it did come down nicely. We didn't make a new low, so obviously I need to cancel that order. But it did come down. So anyway, we made $1.50 on two contracts. And for those of you not all that familiar with the gold, it is $10 a tick, so that's $150 per contract. So a $300 profit on that particular trade because we had break even on the other two contracts. So just kind of a quick overview of that particular trade. So any questions, comments, just get a hold of us at info@daytradethemarkets.com. Thanks for watching, and we'll